Hey guys, welcome to another weekly focus. I hope you had a great week, by the way. So there's been a lot of displacements that happened, and I think when you're looking at this week, I think today Friday had like a crazy move thing. But I'll show you guys what we're looking at. I'll show you guys the position I had this week. I had some losses as well, and I still have a trade that's running, and I'll show you guys everything. So before we come back and look at the DXY and look at gold properly, let's look at the trade recap thing first. Alright guys, so here's a position I had coming into this week. So I had a buy position. I spoke about this last week. I was anticipating price movement to the upside. So I was anticipating the movement to the upside like this. So we had an impulsive move, and this impulsive move was followed by a correction to the downside. So after this correction, I was expecting prices to move to the upside. So this area right here is where I got in on the buy position, and this took me out. So this was a loss if you look at it. I took a loss on that position, and that was the second time I was trying to buy off of that area or off of the pullback that was coming in. So I had another attempt again right here. So this attempt was on the, let's see, this was on the 20th of August. You look at it right here, that was on the 20th of August. So I got in on the buy again. Now here's my thought process just looking at this. It was coming off of this impulsive move to the upside, and price was making lows. So you can look at an area like this. We had a low, and there was a shallow break to the downside. We had price taking out this space, giving us another low right here. Price took out this area, and it was still a shallow break to the downside. So when you look at the lows progressively, price was just finding it very difficult to make the movement thing to the downside. So in as much as I was taking losses, so I took a loss around this area, I took another loss around an area like this. So I was coming into this trade, I'd taken two losses already. First one here, had another loss right here, and I still got in on the buy position thing because I was going off of my analysis thing, and I'd seen this price action thing or this setup playing out countless times. So I was very comfortable taking this position again, coming off of two losses. And I know for some people it gets a little bit tricky, like you've taken two losses already. Taking the third position on the same setup might be a little bit challenging, but it's the setup I've been playing with for a very long time. So I took a loss, and then I got in again with the buy position thing around an area like this. So still expecting prices to move again to the upside. Now if you look at what price has done as we're talking right now, I'm gonna pull this up. So you're looking at this. Eventually we had the movement thing to the upside. So I got in on an area like this. Price did move to the upside. We had a correction thing. So you just had multiple opportunities. I'm going to zoom in a little bit. So you had multiple opportunities to get in on a situation like this. And here is the point, or here's the price I was actually looking at. So initial attempt was right here. Price pulled back. Here was a possible entry again. Price to give you another entry. So you're looking at this space right here. You had three opportunities to get in on this buys, and currently price has just moved to the upside. So once price took out these highs, I had my stop loss move to break even. So I'll show you guys right here. So stops move to break even. So that's the trade I'm currently in on, and I'm coming off of two losses before taking this buy position again. Now this trade is currently running, and I think I'm gonna hold this all through the weekend and see what God is gonna do coming into next week. But before we keep holding this, and before I tell you guys what I'm looking at and let's say possible opportunities for next week, we'll look at the DXY, and then we'll come back to gold and analyze it properly. But here's what I'm in on currently, in on this gold buys, and I'm holding it into next week. All right guys, let's look at the DXY then. Alright guys, so we're starting with the DXY on the weekly time frame. I'm just going to show you guys something real quick. Let's do the 4-hour time frame. I'll come back to the weekly, but let's do the 4-hour time frame. So if you remember from last week, I was anticipating this movement thing. So we had price making highs, like an impulse correction, and an impulse and a correction at an area like this. So I was looking at this last week, and I said, if we find it difficult to move to the upside, then I'm expecting prices to drop to the downside. And that was the main reason why I had the buy position thing on gold. So my whole analysis coming into this week was expecting, or was an anticipation for this trend line to get taken out. And it happened only today, and that's Friday. So during the week thing, you could see price moving to the upside, but there was this difficulty for price to actually make the highs like impulsively. Now we'll come back and look at this, but let's look at the weekly time frame again and see what price is doing. So where is price at currently on the weekly time frame, and where is price most likely going to head to? It's always very important you look at the bigger picture thing. So you don't have to trade on these time frames, but you look at these time frames just to have like a bigger picture idea of what price is doing and where price is most likely going to go to. So on the weekly time frame, if you're looking at the DXY on the weekly time frame, so what's happening currently, you have this impulsive move. So it's an impulse correction, impulse correction. So what we have to do now is look at, let's say, psychological levels, and then look at trend lines as well. So two basic principles, psych levels and trend lines. So looking at the DXY right now, where is price at and where is price most likely going to gravitate to? And are there any things you can look at as roadblocks? So for example, we currently sat at this below the psychological level of 100. So if price finds it difficult to go through this area, this psychological level of 100, the next area price can get to is this psychological level of 90. So when you look at it this way, based off of the principle of psychological levels, price rejecting at one psychological level, you're expecting prices to move to the next psychological level. So that's just like a basic principle thing when it comes to psychological levels. So a rejection at the 100, which is what we're seeing currently, price has been rejecting at this 100 level. It was just one rejection, by the way, not like it's been rejecting multiple times. So we had a price rejection at 100, so we're expecting prices to then move to the downside. Now when you look at it based on psychological levels, we're totally correct to say price is going to move all the way to 90, but at the same time you need to bring in trend lines. So if you bring in a trend line, so you have this counter trend line right here, which forms our channel, and I've been talking about this channel already as well. So once you have this channel, it's very important you look at the trend line as well as areas where price can reject from. So we have a rejection at the 100 level, psychological level. We're expecting prices to push all the way to 90. Now price is going to face difficulties once we come back to an area like this. So it's very important you look at these levels and you start anticipating what price is most likely going to do at these areas. Now if you bring in this channel thing and then you look at the bigger picture again, and that's why I was talking about the bigger picture, because if you just going off of the principle of psychological levels, you'll be very comfortable and confident saying price is going to drop all the way to 90. But when you look at the bigger picture again, it's an impulse to correction, it's an impulse to correction. So price has the possibility to reject around an area like this, which is a pivot point, and you see price is just moving again to the upside. So that's a very big possibility. Now we're coming off of this downward movement thing. So we had a rejection first at about 110, and we had sellers taking prices to the downside. So we're still in this downward pressure thing on the DXY. Now this is on the weekly time frame. It's a bigger time frame. It's going to take a lot of time for this price to reverse, and that's why you can narrow in and look at this movement to the downside and ask yourself, what is price doing as we're moving to the downside? What areas are we taking out? What levels are we taking out? And what areas are we most likely going to test? So those are the things I'm looking at once it comes to higher time frames, and let's say like the weekly time frame thing. So here's my take on the weekly time frame. Just looking at it, we're still moving to the downside. There's still this selling pressure thing to the downside, and in as much as I'm expecting prices to drop all the way to 90, I'm being very cautious knowing that there's this counter trend line thing that forms a channel. So there's now the high possibility for price to move again to the upside. Now that's just one trend line thing. You have this trend line again to the upside. So you have this confluence around this area. So you're looking at this piece right here. There's this confluence, like you have the initial trend line moving to the upside. You have the counter trend line from the channel. When you bring all these things together, you need to see a clear break on the bridge of this area for you to say price is just going to move to the downside completely. So this is something I'm paying attention to on the weekly time frame. Now let's look at this on the daily and see if there's any change when it comes to the daily time frame. So when you look at this, there's a simple principle thing I like talking about. So for example, if you have price moving to the upside and you get a violation, once you have an initial direction that price has been moving and you get a violation thing. So for example, if you're moving from here to this point, you get a violation. At this point, you're still expecting buyers to have a test of an area like this, because there's a high possibility price can keep moving again to the upside. So it's the same thing when I'm looking at the movement again to the downside. So once you get a movement to the downside, you get a violation. You always want to give sellers or buyers that opportunity to test these areas again. So it's what I'm looking at currently on the DXY. So if you look at this movement thing right here, you have this initial move to the downside, you have this breach or the violation of that trend line. You still want to give the sellers another opportunity to see if they can take out these lows right here. So I'm still expecting the DXY to move again to the downside. So I'm expecting a movement thing like this on the DXY. Now when you look at this on the daily time frame and you're comparing it to the weekly time frame, you can see how the picture is lining up. So we're still within this massive movement thing to the upside. We haven't taken out this trend line completely, so there's still a high possibility you could see price coming back to the downside, and inability for prices to go through this area, you could then see complete reversal again to the upside. So those are all possibilities unless price breaks completely and starts moving to the downside aggressively. So back again on the daily time frame. So coming into next week, yeah, my whole analysis thing or my whole bias again is just to see prices testing areas like this, testing this low. So I'm still expecting prices to move to the downside, maybe to an area like this, and inability for prices to go through this area. Knowing we're coming off of this counter trend line movement thing, then there could be a high possibility for prices to move again to the upside. So you see, just possibility after possibility. Now let's clean this, and here's on the daily time frame. If you step down to the 8-hour time frame, you might see something completely different. So it's a little bit different, but it's not like 100% different from what's on the daily time frame, by the way. So on the 8-hour time frame, we was coming off of this channel to the downside. We had a breach of it, so it was a break, and then it was a retesting around an area like this. We had an impulsive movement to the upside. So what's my take when it comes to the 8-hour time frame? So on this time frame, here's what I was looking at. It was an impulse, then a correction, giving you a test of this area. Price took out these highs, and it was another impulsive move to the upside. So when you look at this space on the 8-hour time frame, what makes sense to me is this space of price action right here. So if you can dissect the space of price action, if you understand what's happening within this area, it makes it easy coming into next week to then say, all right, cool, I'm expecting the DXY to drop, or I'm expecting the DXY to rise. And depending on how it decides to move, now you know what you have to do on gold and other pairs. So looking at this, so what is price doing currently on the 8-hour time frame? Recent price action is what's really important on these lower time frames. It's an impulse, it's a correction, and it's an impulse. Now when you look at this space, we still have these highs and we still have these lows. So we haven't taken out these areas right now, so we're still playing within this overall structure thing. So what we're seeing right here, it's a little bit tricky right now. So look at this, you had an impulsive move to the upside, we had a correction to the downside, then came this aggressive movement from the buyers. So we was looking at this and expecting prices to keep moving again to the upside, then came a complete reversal thing. So while we're looking at this, now my question is, I'm just going to zoom in on this piece of price action. So if you're looking at these lows right here, and again, today's Friday, so there might be more price action coming into next week, and it's going to tell us a lot. So we're looking at these lows right here. So this piece right here. So we had these lows. Now we had an impulsive sell coming in today, I think after the news release thing. So we had an impulsive sell, but when you look at how price is taking out these lows, it's a very shallow break. And I understand completely, today is Friday, so there's still a lot that can happen coming into next week. So there's still a high possibility we could see prices breaking out of this area impulsively to the downside. But my take is, when you look at this based off of what's happening today, in as much as we've seen prices moving to the downside, we haven't really taken out these lows like impulsively. So we had price coming in, testing these lows, and it was just a shallow break thing. So when I look at something like this, it tells me we're still playing within this overall structure. We still have this impulsive move. And if you've been watching my analysis and everything, once you have an impulsive move, for example, to the upside, and you get a movement thing to the downside, or you get a violation, a breach, you can call it whatsoever thing you want to call it. But once you have this breach thing to the downside, a violation, you still want to give price that possibility to come back to the upside. So there's still high possibility. We're looking at the same thing right here. From here to here, that's the impulsive move, and everything coming to the downside could simply be a correction. So at an area like this, we're still looking at this on the 8-hour time frame. There's still high possibility the DXY can reverse and start moving again to the upside. Now, if this happens, you need to step back to, let's say, the weekly time frame and ask yourself, what is happening actually? So if we get a rejection thing on the 8-hour time frame, it tells you two things, yeah? So the first thing, you still have this area, the pivot area that's holding, and you have an area like this that is still supporting the buys again to the upside. So a rejection around an area like this, it's not going to be strange or surprising. Let's say on the 8-hour time frame, if you see that rejection thing and price that's moving to the upside, what you're expecting on the weekly time frame, for example, is for prices to come right back within this area, giving you, let's say, an impulse test, and for price to keep moving again to the upside. So when you're looking at prices for multiple time frames, it's very important you put everything together. So that's it on the 8-hour time frame. Let's look at this. So I'm paying attention to this piece right now on the 8-hour time frame. So here's what makes sense to me: impulse correction. So I need to wait and see what's going to happen. Maybe let's say Monday or Tuesday, depending on what happens on Monday or Tuesday. If we see this correction again to the downside, all right, then cool. When you look at that on the weekly time frame, it's a clear breakout of that area. But an inability for prices to go through this area is basic, like that's just common sense. Impulse thing right here, everything is a correction. An inability for prices to go lower, you're expecting a retracement back for price to have a test of an area like this. So that's my analysis when it comes to the DXY thing. And you can look at this on the weekly time, on the 4-hour time frame. Perfect. So on the 4-hour time frame, it's an impulse correction with a push to the upside, an inability for prices to make new highs, and we had this sells coming in. So we've had prices coming back to the downside. Now let's look at this on the 4-hour time frame. So here's my take now on the 4-hour time frame. It's going to be slightly different from what's happening from what I'm looking on the 8-hour time frame and the daily. So on this time frame, we have an impulse correction. We had price moving again to the upside. There was this inability, then we had a bridge to the downside. So we've taken out this space. Now looking at this on the 4-hour time frame, what is price most likely going to do? I'm expecting a pullback with price having a test of this trend line, an inability for price to clear this area like right here, let's say like pulling back into the trend line thing, an inability for price to do something like this, and then I'll be expecting a test of an area like this and a complete rejection again, and for prices to move to the downside. So that's my take right there on the DXY, and we'll see how this plays out. All right guys, so let's look at gold and see if there's any opportunities coming into next week. All right guys, so here's gold on the weekly time frame, and before we break this chart down, I just want to say sometimes, yeah, it's okay for you to look at a single pair, and sometimes it's okay for you to look at multiple pairs. It just depends on what phase you are in your trading. Like right now, I'm really comfortable just looking at one pair, and I still know and I still believe there's going to be a period where I'll decide and be like, no, I just want to look at my indices again. I want to look at US30, I want to look at NAS, I want to look at the S&P. So me looking at gold all this time doesn't mean I can't look at those other pairs. It's just right now I'm just I'm comfy looking at this pair, like just gold, and I'm not really stressed about the other pairs. I don't care if those other pairs are making new highs or they're just going crazy. Like right now I just want to look at gold, and there's a reason why I'm doing this, and it's always very important you understand the phase where you are in your trading thing, and just learn to accept it and capitalize on everything. All right guys, so here's gold on the weekly time frame. So what is gold doing currently? So we've seen this impulsive move to the upside. There's been a correction, impulse correction. So you look at this movement thing on the weekly time frame, you can tell gold has been bullish, like bullish coming into this year. So where is price at currently, and where is price most likely going to gravitate to? Now we're coming up of this psychological level of 3,000. So if price keeps moving to the upside, we're expecting prices to come all the way to 4,000. Now it's going to take time for this to happen. This is on the weekly time frame. You need to see corrections, you need to see consolidations. So I understand this already. So I'm not just expecting gold to dive out, like go all the way to like 4,000 without giving you periods like this, or without giving you pullbacks like this. So you understand these things already. Now let's look at this piece. Now if price has to pull back, yeah, because you're looking at this trend line thing right here. So if price has to pull back, you need to ask yourself already, if price is pulling back, where is price most likely going to pull back to? You can then use your trend line. So if price is coming again like a pullback thing or a correction thing, we're expecting prices to come back to an area like this. And inability for prices to go through areas like this, you can call this pivot points. You can call this pivot points. Then we're expecting prices again to then bounce off of this area, taking out this area, this highs, making new highs and making it move all the way to 4,000. Now that's a long-term thing, that's a bigger picture thing. Now when you step down to lower time frames, so here's my take on lower time frames. Before we step down to the daily time frame, I'm expecting these highs to get taken out. Once we take out these highs, I'm not expecting like an impulsive breakout of this structure thing. We just want to see price taking out these highs. When it takes out these highs, then we will expecting a rejection thing, price coming back, giving us a test of this area, a rejection, before we can see this price moving again to the upside. So that's a setup thing I'm playing with, but it could be different and I can't really tell. Now let's step down to the daily time frame and see what's happening. Now the daily time frame and the weekly time frame looks completely, I'll say it looks the same. Now there's more price action on the daily, by the way, but the piece of price action I'm paying attention to is this piece right here. Now, why am I paying attention to this piece of price action? The reason is simple. The structure thing I've been talking about all this time. Once I see an impulsive move to the upside and you get a violation of this impulsive move, you always have to give price a benefit of, let's say, if you're looking at buyers, for example, and you had an impulsive move to the upside, once you get a violation, you need to give these buyers another attempt to see if they can take prices again to the upside. So you want to see the buyers attempting to take out these highs. Now if the buyers try taking out these highs and for some reason there's that inability for prices to go through these highs, then you know, all right, cool, there's that inability for prices to go through the highs, so I'm expecting a reversal thing to the downside. So it's a simple principle I've been using for a very long time, and you can see the same thing here. It's an impulse, you get a correction thing, and you still see price moving to the upside, an inability for prices to take out this area, then you see the rejection thing coming in. Now same thing, that's an impulse right here, you're having a correction, you want to give the buyers that opportunity to take out these highs again. And that's why if you look at my trade thing, yeah, I'll show you guys. So if you look at my trade thing right here, so we're coming off of this impulse, it's a correction thing. So what am I expecting prices to test? So I'm expecting a test of an area like this. So once price gets to this area, I'll look at the price action, I'll look at everything, look at where the DXY is, and make an informed decision if I want to close it or if I want to keep holding it. So that's the area I'm targeting right now, and I have my stops move to break even already. But it's the same principle thing, and I keep hammering on this. Pick one system, pick one approach to the market, capitalize on that approach, and keep repeating the same thing. Rinse and repeat, rinse and repeat. And it's gonna get to a point where you become so confident about your system, you become so confident about your structures, to the point where you can take multiple losses and you're still looking at the same price action, you're still looking at the same thing. Now a lot of the talking, yeah, but let's come back to the chart thing. All right, cool. So here's on the daily time frame, and here is a piece of price action I'm looking at. It's an impulse, it's a correction, and I'm expecting prices to take out these highs. So as you move down to lower time frames, now this piece right here, impulse, consolidation, it all makes sense if you're looking at higher time frames. But if you want something to trade for the week, if you want something to trade for the day, you need to look at recent price action. So here's my recent price action, impulse correction. Let's step down to the 8-hour time frame and see what's happening. So on the 8-hour time frame, I had this piece right here. So I was playing with this. Here was an impulse, here was a pullback, there was an inability for prices to take out these areas. You can call that an initial attempt thing. And I was looking at this piece as a channel. So once we had price moving to the downside, I was expecting these areas to get tested, but price didn't test this area, so that's completely fine. Then came in this impulsive movement to the upside, and you can see the correction thing. You can see how price is taking out this lows, how price is taking out this low. It's really struggling. It's not taking it out impulsively, so that's already an indication that price is going to move to the upside at some point. It tells you, like, you can see the correction. It's struggling, like as price is making new lows, it's just struggling. So that already can tell you, like, we're getting ready for price to move again to the upside. So that's on the 8-hour time frame. Not a lot you can look on this time frame, so let's step down to the 4-hour time frame, and this is what I was talking about last week. So right here, so we had this area taken out, impulse giving us a test of this area, sellers coming in, and there was this inability for prices to take out this low. So we made another low right here, and price didn't go through. Now if you want to look at this entries, I think you can look at it better on the hourly time frame, but it's the same thing. It's an impulse, it's a correction thing, and then price starts moving to the upside. There was multiple areas you could take entries on this space. I'm not gonna go deep on those entries right now, but let's look at this on the hourly time frame, and I'll show you guys my entries right there. So I don't think there's a lot I really have to talk about when it comes to this analysis today. I spoke about this last week already. So what we're seeing right now is just the aftermath of what we did last week, and nothing has really changed. It's the same pace of price action, same thing I was looking at, same thing I was talking about. So you're looking at this space right here, impulsive move to the upside, then comes this consolidation thing. You can look at everything is a correction. Now the most important thing, or I think the most difficult thing, is knowing when price is going to move again to the upside. So you have an impulse, then you have a correction. I think it gets really confusing once you're looking at the points where you have to go in and to see price then moving to the upside. Now if you look at the way, if you look at prices the way I look at prices, I pay attention to certain price levels and not the candlestick colors, for example. So it's okay for me to take buys off of areas like this, knowing we're coming in from this aggressive sales. It's very okay for me to look for buying opportunities there, because there's certain price levels I'm looking at, and it has nothing to do with the color stick candle or even the structure price is showing me currently. So we've taken out this piece right here. At this point I can take this out because that was a point for me to break even. So right now my thought process looking at this is, if you didn't get in on this position, let's say around an area like this or around an area like this, if you didn't get in on this position, now price is giving you another impulsive move again to the upside. You're looking at this impulsive move. How do you get involved in a situation like this? It's very simple. You want to wait for price to give you a correction thing. When price gives you this correction, this principle remains the same. It's an impulse. You wait for the correction and you wait for prices to move again to the upside. It looks easy once you draw it this way. So once you're looking at something like this, it looks easy. But when you come to the re-chart thing, yeah, when you start looking at this impulse and they tell you, all right, take the buys off of this correction, it now becomes like a nightmare thing, because timing it is not usually very easy. All right guys, but that's my thought process right there. Impulse correction, impulse correction. So if you're waiting for another opportunity to join this movement thing, just wait for price to give you a correction, then you're looking for buying opportunities again to the upside. So you might be looking at something like this right here. I don't know where price is going to pull back to. I'm just giving you an example, something like this. So there's still a possibility you can get something out of this move, but you need to be patient and wait for price to pull back, and you play off of those corrections and see if you can get entries off of that. That's my analysis right there. I would say it wasn't really an analysis thing, because we did analyze this last week and the week before last, and this is a move we've been looking at. So ever since this correction came in, we've been anticipating this movement again to the upside. Now, is price gonna get to this point? That's never a guarantee. That's something I've learned in the market already. That's never a guarantee price is going to come back to an area like this, and that's why I have my stops moved to break even, because this can reverse completely to the downside coming into next week. So there's always two sides to the coin. you can get too excited based off of this impulsive move, and you can get depressed based off of the initial losses I had already. All right, guys, that's it for me this week, and I'll see you guys next week. Make sure you're patient with your analysis, stay consistent, and above all, you want to pray all the time and just asking the Lord to give you that thing, that brain, that ability to look at prices different, like completely different from how every other person looks at it. And I think I just believe it's going to be a breakthrough for you as well. All right, guys, I'll see you next week. That's it for me. Bye for now.